Hello guys, welcome back to Soji. This is Soji Forex, and I want to officially welcome all our new subscribers to this channel. What we do on this channel is that we do a research, we test several indicators, and we backtest them to see how we can take advantage of them to become profitable in trading the financial market. And after due analysis, we come forward to share with us so we can as well practice and put them into use, take advantage of them, and make a little peep from the financial market. Thank you for subscribing to this channel. So today we'll look more further into our analysis of the market and see how we can make our entries. I want to establish first that there is no trading strategy that is 100% accurate. If there is anyone deceiving you that he has a trading strategy that is 100% accurate, that with his or her trading strategy you cannot make a loss, then that is a big lie from the pit of hell. There is no trading strategy anywhere that is 100% accurate. But what we do is a game of probability. If you're lost, it's no more than your profit. And at the end of the day, you have something to take home. That means what you are trading can put something on your table. Believe it or not, that is your strategy. Because the sole aim of trading is for us to make profit. As a trader, nothing more and nothing less. And we must also realize that trading does not have to do with a single pattern or a single strategy. What matters in trading is get a strategy that gives you profits, that make you profitable, and stick to that particular strategy. Once you have done that, you focus on it, you build yourself on it, you develop yourself on it, you spend time on it, and you are good to go. Being it price action, being it market makers method, which is the smart money concept, ICT, BTMM, anything you can think of. The goal is for you to acquaint yourself and make profits out of it. Alright? So please don't be carried away with what you hear here, what you hear there. What matters is, are you making profit with what you are doing? If you are making profit, knowing 10 strategy will never make you successful in trading. What makes you successful in trading is Are you making profit from what you are trading? If yes, you are good to go. Embrace it, focus on it, and build yourself in that direction. So let's go into our analysis. We say, first of all, when we open our chart, this strategy basically, I use it to trade boom and crash and step index. I have practiced the indicators you are seeing on my chart, and basically those are the assets. These assets here are what I feel these indicators are performing excellently on it. Alright. So when we open our chart, we use our indicator to determine the behavior. And first of all, I said we have two Bollinger Bands. We have the default Bollinger Band, which is the one with the gold color you are seeing, or the yellow color, as the case may be. Then the green one you are seeing outside is my Bollinger Band. The period is 130. Now this period 130, I use it basically to determine the exhaustion point of the market. Remember, the behavior of boom and crash is different from every other asset. There's a level boom and crash reach, and they'll begin to make a reversal. There's the level they reach, they begin to make a spike. Why? Because the algorithm using in making boom and crash is a different algorithm. Just as it is stated here, on an average of one spike occur in the price after every 1,000 candles. After every 1,000 candles, an average of one spike occur. And that shows that these things can be predictable. We say predicting, we are not saying it must be. So we use this our upper Bollinger Band to establish our exhaustion point. We know that this market is in an uptrend, and our lower Bollinger Band is also used to establish an exhaustion point for a sell in boom. The upper one is used to establish an exhaustion point for a buy in boom. So looking at this, we're about having an entry, having established that price has reached the upper Bollinger Band and is piercing through that band, just as you have seen here, pierces outside. We'll come to our indicator window 1. This is our indicator window 1. And we see same happening here. Our histogram is at the level of 90. And I'm moving average 7. I mark this signal line at about making a cross. We move to our indicator window 2. Then we want to see our stochastics is up. And all this while, we can see how our moving average 10 is making a cover on the stochastics down till this point, and now there is an intersection between our moving average 10 and the stochastics. So this cross and this curve of this moving average 10 to the downside is what will confirm our entry. Then for us to take a trade, having met this condition, we now come to the main chart. We want to see our price closes below 2 or 3 of these moving averages. And which are they? Moving average 10, which is the red one. Then we are having this blue one to be a moving average 15. So it's either we wait for price to close below it, or wait for price to close below this black moving average, which is the moving average 25. Or price will close below the Bollinger Band period 20, which is the gold line, the middle band. Once price closes below this, we are good to make our entries. So let's observe this market to be our example and our live trade. Let's look at crash. Now, the beauty of what we are saying is everywhere. If you follow this instruction carefully, you will see that this strategy helps you to filter your entries. You don't just make anyhow entries. Let's take a look at it from here. You see that despite that it pierces our Bollinger Band, showing exhaustion, you will see that price has not closed above this our moving averages. So we are not making an entry. You see it? So you are safe. You don't just rush into it. You are not making an entry. Do you get? Yes, the market has sold for a while, but does that mean we just jump into an entry? No. We are trying to filter which of the entry is the best. So you see now we maintain this now until this point. And then when you look at it, look at what happens here. Good. You see that now here we have a cross between our stochastic oscillator and our moving average 10. After this cross, this moving average 10 begin to serve as a cover, as a cloud below the stochastics. And then looking at our price action, look at what happens here. Price closes above our moving averages. So you just make your entry. Your entry is here. Your stop loss is here. And then your take profit can be somewhere here. And then this is simple and you are good to go. And another confirmation is that you will notice that there is a divergence. Can you see it? Because while market is busy making a low, a lower low, our indicator window, look at it, is busy making high, a low, is now making high, higher high. So these things are a combination of structure. We are not just doing it. We know that what we are doing is a deep down analysis. We know that this is a downtrend from H1. It's a seller's market. But we know that the sellers will not continue to sell forever. No market goes in the same direction forever. It will not keep selling forever. It will not keep buying forever. We know that this market is already exhausted and there will be a pullback. And when you look at here, you will see the same thing on 1 hour, that there is a divergence. Like I said, if you don't know what divergence is all about, please refer to our previous video. Indicator is doing the opposite of what the main chart is doing. Look at it. Okay, so it's doing the opposite of it, and then you can see that the market is actually doing a low. Indicator already has a low, it's now making a high, but look at what the market is doing. It's still making low and then a lower low. So we know that something is about to happen. Even without using indicator for an entry, now that you have established this, you can pick up your line, pick up your trend line, and then from this previous lower high, you can just draw your trend line and wait. Now you are waiting for the market to close or break this trend line. Once the market breaks this trend line and price closes above the trend line, it's another entry for you. Because already you know that the market, there is a divergence that is already happening in this market. So you quickly rush, draw your trend line, then you wait for price to break the trend line, which happens here, and then you will make your entry. So simply your entry will just be somewhere here. This is even on 1 hour. Here above those moving averages, look at your entry here. And then you put your stop loss at the previous low, and then just watch the market do its things. So this thing is a combination of principle. We did not just isolate it to like, why is it only indicator we are trading? We don't have idea of what price action is. It is price we are observing. What is price action? Price action is the behavior of the traders as it presented on your chart. It's for you to determine who is in control of the market. And how do you know who is in control of the market? You need to know the knowledge. That is why all these tools are being put together, the indicators. If that is what is convenient for you, among other tools, to help you analyze and then take advantage of it. Let's look at our Boom 1000. You see now, this Boom 1000 have closed below moving average. Then that's closed below moving average 15. So if you are somebody that want to make entry, you can make entry. We'll make our entry already. A stop loss is supposed to be at the previous high, which is 14421. 14421. That is our entry. So as we keep going, we can choose to close partial. As the trade keep running, we can choose to close partial. Now, simple. This is about the analysis. This is about the analysis. Now, look at what happens here. This is market doing lower low. Look at what the indicator is doing. This is a divergence again. And another clear sign here is the fact that this has already pushed, piercing the lower, our Bollinger Band period 130. And there is a divergence on our indicator window 1. And we also established that here our stochastics make a cross along this region, and moving average has become a cloud. And then look at what happened. The only difference here is that our histogram line has not reached the level of 10. But since we know here there is a divergence, you can take advantage of this. These things are pretty simple that you can capitalize on. All you need to do is practice and practice and practice. Now the same pattern is available if you want to buy boom. Now look at this thing. These things are too clear for us to doubt. Look at this. Consider high. See that price is piercing the upper Bollinger Band. Look at it. Price is piercing this upper Bollinger Band here. Now there is a divergence on our indicator window. Here we are having a divergence. And then we have this wonderful cross. This perfect cross. For stochastics. Now moving average 10. And then look at how massive this thing does. And from this side, the same thing happened, the opposite, and then boom, boom, boom. It begins to go up. Please, I would advise that you practice this thing. Be patient with this thing. Practice it. It is only by practice that you get to know the lapses. And when you get to know the lapses, please come to the comment section, drop your question, and I'll be glad to answer. I believe you are getting value from this video, from what we are sharing. Please support what we are doing. Subscribe to our channel, like the video, share the video with your loved ones. Now with this strategy, I've done several backtests. Just focus, pick the asset, take 10 trades in a day, then come out with the result. Carefully take 10 trades. You will not close a trading section in a loss. At most, make 20 entries or 15. And then at the end of the day, see what is your result. Even if 4 should go, there is no way those 10 entries will go against you. Watch our previous video on risk management. We are going to do that again. And thank you for watching this channel. Please support, subscribe, like, and comment. In the subsequent video, we'll be looking at how to take advantage of the default Bollinger Band, and then how to take continuation state using our middle Bollinger Band period 130.